Hi, this is Chuck Oliver. Welcome to this week's Hidden Wealth Solution Review. How to prepare for the tax blindside. Now, one of these is controllable. The other one is not controllable. And I'm just going to give you a couple of the blindsides. These are the two biggest blindsides we see in helping boomers and retirees all around the country. This is my 28th year in working with baby boomers and over 2 decades actually doing retirement planning. And the distinct difference, I want to catch everybody's attention here, is those of you recognizing there's a difference and should be recognizing there's a difference from going from accumulation phase to preservation phase, right? From going from a paycheck to creating our paycheck. And I want to teach you that these blindsides, one of which is required minimum distributions, typically we don't catch up. These things don't catch up to us. I quote a Kiplinger article quote in Hidden Wealth radio program this weekend, and it's, you can only control what you can control, right? And that's so true. It's like, well, duh, Chuck. I mean, that's common sense. Well, we can't control taxes, and we can't control tax laws, but we can control how we plan for them. So what are some of the things we could do? Well, we can plan for the fact that obviously taxes are going to have to go up, because if they want to spend like crazy, and there's no end in sight with that, folks. We already exceed, we spent $2 trillion more than we brought in this year, and it's going to get worse before it gets better. They've already proposed almost another $5 trillion of deficit spending on top of just our annual deficit spending on top of that over the next decade. I think that'll be a gift. I think it'll be 10 trillion to 20 trillion of deficit spending. We're already going on 34 trillion. In our national deficit. Well, if you want to spend more, you got to tax more. So we can prepare for the fact, and I've warned many of you about this, that they're going to change the tax laws to restrict enabling us to get our money tax-free, like doing Roth conversions. A lot of people forget the fact that there used to be an income cap to be able to do a conversion. President Obama lifted that in 2010, and some of you may remember this. He even gave us 2 years to spread the conversion tax over. So now it's unlimited. A lot of people are like, well, Chuck, what's the most I can convert? You can convert it all. But you got to be careful, because we also can control the fact that the more we convert, if we don't have deductions to offset them, we're going to pay through the nose of unnecessarily higher taxes. So we approach these RMDs, which is one of the big ways to prepare to stay ahead of these tax blindsides, in doing systematic Roth conversion, right? And that's where, for some people, we can determine with our tax team that prepares and teaches our clients through they know what we do, we know what they do, so we're on the same sheet of music and we're singing the same song, how to get the most amount of money out for the least amount of tax by converting it from IRA to Roth IRA. But we also teach strategic Roth conversions, where I'll teach Tuesday at retirementprotected.com. That's retirementprotected.com. And there's still time to see how much lower your taxes can be, folks, still in 2023, but you've got to act. This is using a little known deduction that's a top line deduction that will reduce your taxable income. And when you do a conversion from an IRA to a Roth IRA, that increases your taxable income. So you can control that. If you can create a deduction big enough to offset the amount that you decide to Roth convert from IRA to Roth IRA, the deduction zeroes out the added taxable income, and you don't add any more to your income, and you don't have to pay tax to get it converted. Folks, we do this every week, and you can learn this too. Now, the widow penalty, I'll leave you with this. This is where if you have a spouse, we all know that none of us are getting out of here alive. And I used to say the only two things that are guaranteed, or I've heard people say, are death and taxes. I want to tell you, you can control the taxes. Can't control the death. So use up the marginal joint filing tax brackets, because if you don't, and you leave too much money to your surviving spouse, and I don't care if you're in your 80s or you're in your 40s, pay heed to this, because I see a number of widowers that come to us that would have normally been in a married filing jointly 22% bracket that have now, in a 12% filing jointly bracket, that immediately after losing a spouse get shoved up to a 22% bracket. And remember, folks, taxes are on sale right now. So 12 will be 15 and 22 will be 25 just in the next few years. And that's before this drunken sailor administrative spending doesn't force our federal tax rates even higher. Because folks, believe me, if you don't know what the existence of our tax system since 1913 has averaged a tax rate in this country, spoiler alert, it's been an average of 60%. So if you're 12 to 22%, taxes are on sale. Take advantage of them. Go to retirementprotected.com. That's retirementprotected.com. Let me teach you how to avoid these tax blindsides. And that's even before the tax rates go up, which are blindsides. That's a blindside in itself. Learn how to take advantage of the sale, folks. You work hard for your money. And if you want to know in under 30 seconds what you're facing, and I encourage all of you, it's a free resource. In under 30 seconds, go to retirementtaxcalculator.com. That's retirementtaxcalculator.com, and put in all your not yet taxed money, all your IRAs, 401ks, whether you're working, not working, it doesn't matter. Whether you're early, trying to get to retirement or better through retirement, folks, it's never too early to get tax smart on saving, and you'll know. And then I'm going to teach you proven strategies at retirementprotected.com, folks, removing your retirement assets and income from the tax system legally, ethically, and morally. You work hard for your money. Retirementprotected.com, retirementprotected.com.